The latest CPI report shows inflation is slowly but steadily cooling off.
That's right. Consumer prices were up 7.1% in November compared to the same time last year. Now, this is below expectations. While the numbers are still high, it is the fifth straight month that we've seen the inflation rate go down. Let's bring in Lori Bettinger. She is the president of BancAlliance and the former director of the Troubled Asset Relief Program under the Obama administration. Lori, welcome. So what is driving the inflation rate to cool off?
Well, there's a couple of different areas where we've seen some real improvement this month. I'll start with food. Now, the pace of the increase, as you mentioned, has slowed. Food is still up 10% year over year, and that's clearly something that we all see as households and families. You know, it's just so much more expensive at the grocery store or restaurants. But that pace of increase is slowing, which is good news. We're also seeing a decline in some of the goods that were really impacted by the supply chain issues, that we've seen for months now. Things like used car televisions, those prices are starting to fall. And then energy, which is another, large component of this calculation. Gas prices have sort of, continued to be much lower than they were, in prior months. So across different areas, there's good signs. On the other hand, there's a really large component of this consumer price index. You can think of it as like rent or shelter, and they have different measures, whether you're renting or sort of owning a home. And those are still fairly high. And, that's sort of what we think of as a sticky component. Once rent prices start to go up, they really don't come down very quickly. So, different things are moving in different directions. But overall, this is a really positive reading compared to where we've been these past few months.
Lori, tomorrow, people who are hoping to buy a car, a home, or have a large credit card balance are all going to be watching what the Federal Reserve announces in terms of their decision on raising interest rates. Since inflation appears to be slowing down, how much does the Fed really need to keep raising these rates?
I don't think that we're going to see the Fed move away from the communication strategy that they've been having for months, which is that we're going to continue increasing interest rates until we see a really sustained decline in inflation. And while I think today's news is certainly positive, I don't expect the Fed to change its path tomorrow. I think a lot of people are talking about maybe the size of the increase would be lower, 50 basis points as opposed to the 75 basis points increases that we've been seeing. And I think that's a very reasonable expectation. But I'm not sure that today's good news changes what the Fed does tomorrow. Maybe it has more effect on their actions next year.
Yeah, and we had already been looking at the possibility of a 50 basis points increase anyway. So
yeah, and Fed Chair Jerome Powell has said that his target ultimately is a 2% inflation rate. Realistically, Lori, how long could it take to get there?
I think, unfortunately, it could take over a year. I know that there's a number of sort of these economic consensuses where, people ask a lot of different economists, and they're thinking that maybe, inflation by the same time next year could be running at 4% year over year, which would certainly be better than where we are today, but still higher than a 2% target. And, we talk a lot about some of the more volatile components of these indices that move around a lot, food and energy. And again, while we've seen improvement in those areas, we always have learned to expect the unexpected. So, I'm not sure that, a couple of months we could still see some backwards motion. And the other thing that, we've really heard the chairman say is, he's still focused on what's going on in the services sector, right? We have goods, which are things, and services, which are, intangible things. And, that's where the primary cost is really wages. And we're still seeing, a really strong job market. Companies are looking for more employees, and they're having to pay more to either hire new employees or keep the ones they have. So there's still different places where I think inflation can really impact our economy.
All right. Lori Bettinger, it's always so nice to have you on the program. Thank you.
Thank you.